Stop overpaying on your home loan. We understand that managing your finances can be overwhelming, especially as interest rates continue to rise. With access to 70 plus lenders, our team of specialised brokers will find the best rates for your specific needs. Count on us to secure a lower rate swiftly, giving you the confidence you deserve. Book an appointment with one of our experts today to protect your financial well-being and secure your future. Call us now at 02 8866 2444 or visit our website at finny.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, it's Phil Tarrant here. I'm the host of the Smart Property Investment Show. I hope you're well. Recording after the long weekend. And we're very close. We're looking down the barrel of Christmas and summer season ahead of us. Who would have thought always the way? The acceleration of time during the course of the year. We kicked off the year with rising interest rates, a lot of fear, a lot of uncertainty in the market, a lot of people concerned whether or not they were going to be able to pay their mortgages and with a view towards the interest rate cliff. I think there's a lot of data coming out recently which shows this notion of the interest rate cliff perhaps not as significant as what people had thought. The fact that a lot of Australians were ahead of their mortgages as a result of the COVID pandemic is a good thing. Still to play out though, and we can watch this space, but I know a lot of borrowers, owner-occupiers, and also investors in particular have been looking for sharper rates. I've just gone through a process myself of refinancing the Smart Property Investment portfolio, and I'll be reporting on that shortly. I've been using the team over at Finny Mortgages, finny.com.au to do that body of work with me. I've just signed a whole bunch of mortgage documents just last week, so that should come into place pretty soon, plus some more to go. So setting everything back to 5-year interest only just to help with the cash position on the Smart Property Investment portfolio, but it's something we can talk about. But I do use a broker for all of my mortgages. I've never gone directly to a bank, and hopefully that will be the way it continues. I'll try and find a bank branch in my particular area these days, and it's a bit difficult to even get close to it. Yeah, good luck finding a bank branch where you can actually talk to a teller, let alone have someone that would be sophisticated enough to be able to help someone like me out with a pretty complicated structure of skill and mortgage. But I'm not a bank beater-upper. I do get frustrated when I do chat with banks, particularly on the phone. I very rarely have a good experience working with a bank directly. If you go to a bank branch, if you can find one, they'll normally send you to some phone-based operator that will send you back to the bank branch. So this is the way of the world. So this is the reason why I use a mortgage broker. All of my home loans, all of my mortgages, but there's two sides to every story. So I've asked someone to come onto the podcast to give us a bit of a sense of all the things that banks do well. And as I mentioned, I'm just dealing with the bank through one lens. They are the backbone of the nation. A lot of us with super funds typically have a lot of bank shares. It's where a lot of Australians have their wealth tied up in those shares, and they do provide that service. We also have a banking sector in Australia which is well regarded globally. You know, think about how it performed during the GFC when other banks went to the wall. The strength of the banking sector in Australia is significant. So they do a good job. It's not always nice to interface with them. So that's why I use a mortgage broker. But joining me 10 years with the bank, now with Finny Mortgages, Julie Brennan, she's a broker there. She's probably going to give me a more measured approach to my views towards banks. Julie, how are you going? You well?
I'm good. How are you?
I'm good. 10 years with bank. Are you going to tell me which bank you were with? Is it
which bank?
Click over the logo. Which bank?
Yeah. So I was 10 years as a branch lender, and before that I was sort of second in charge of a branch as well. So I guess I can see both sides of the coin when it comes to how the branches can assist clients with their loans, and then also being on the flip side now and in brokerly and seeing the benefits, I guess, of that as well.
Yeah, and banks, as I mentioned, they've been the bedrock for how Australians have secured finance for nearing a couple of 100 years now. I know Westpac and CBA are very old institutions that have been serving people's banking needs for many, many years. And the way we bank has changed considerably. I remember as a kid having a CBA account with a little passbook. I remember going into Toongabbie Bank branch to try and access my money. And back then, banks were big things. You only need to look at some of the buildings on Martin Place to see how significant the opulence of the banks back in the day. The way we bank now is different. It's all electronically. What you can do digitally banking versus what you had to do in an analog way is mind-blowing these days with, direct payments and Oscar, and also how we're skewing mortgages. Banks make their money through lending money. It's very, very simple. A lot of people think banks don't want to lend money. They do want to lend money, but how we do it is different. Are you one of these you're nostalgic around banking of the old days and people going to bank branches and bank branches being the most important destination on a high street and people having a relationship with bank managers? Did you have that sort of nostalgic view to banking, Julie?
No, like I was as I said, I was in the branch or the bank for 15 years, but I did see it change over the time. So like even when I was started in lending, you had a dedicated home loan lender at each branch. And then as they restructured and changed staff, I would end up looking after 2 or 3 branches. So I guess then having the availability of being able to walk in and talk to a lending manager then might not necessarily be there. And then I just saw the progression as well with, I guess, the way the banks were starting to streamline their processes, that they would then be putting you onto digital lenders that aren't even in the branch. So you're sort of losing that personalised contact as well. Whereas from when I started, you would see your repeat clients and you build up that relationship with your repeat clients. And I guess that's where the benefits of then the swing is with the broker, because you just start that relationship out strong and you maintain that relationship. Whereas a lot of branch staff, they do just move on. They move on to different roles within the bank or they move somewhere else. So you lose that connection.
So that the relationship managers and bankers through just work-wise, you never know who they are. You want to call up the bank, you go, what was their name again? Those sort of old nostalgic relationships are gone, where bank manager would have looked after yourself and then your kids and then maybe your grandkids. It's a much tighter relationship, but you still get the benefit of that with the mortgage broker. Today, when you were inside of a bank doing lending, how many clients would just be, the term is vanilla, like really straightforward, easy clients? Do they exist anymore, or is everyone sort of a bit complicated these days?
They did when I've sort of been out of the bank for 7 years or so now. So, but when I was in, and the area, the demographic that I was in, I was dealing with a lot of vanilla clients, a lot of, say, mum and dads, a lot of first-time buyers getting into the property market, or a lot of sort of mum and dads that are looking to upgrade the house, or they're looking to buy just their first investment property because they've paid down their home loan significantly and they've got some equity there. A lot of the demographic that I saw, particularly PAYG, or a lot of tradesmen, so just simple self-employed, simple company structure, nothing, very complex, I guess, in the demographic that I was working with. So, and that's where I guess the swing has been going into the broker lending space, that we deal specifically, obviously we deal with investors at Finny, and we're just dealing with sometimes some complex multiple portfolio clients. So it's knowing sort of where to place them and the niches that will suit them as well.
It's been a good apprenticeship, spending all that time inside of a bank branch at volume, many, many loans and getting that experience, which must be an enabler for you today.
Oh, definitely. And they are a very good training ground. They're very with their processes, and just to understand the whole way, obviously the whole way that the banking system works, not just the lending side of it as well. So you understand how it all fits in. And with the bank as well, it's a little bit different to the broker. There was some flexibility, I guess, with regards to dealing with the credit assessors directly. If you thought that there was a deal that it maybe not quite meet their policy, you could have like a bit of a conversation. Sometimes in broker land, it's a little bit more black and white. So there is some pros and cons to both, I guess.
Yeah, there is certainly pros and cons. And I know a lot of people still go into a bank branch. If you look at mortgage broker volumes, it sort of hovers around, I think 70% of all new loans now are broker originated, which means 30% of people are still going into a bank branch. So it's a traditional way of banking, and people still get a lot of satisfaction out of working directly with the bank. What you don't get going directly to a bank is choice, and that is the real proposition for broking. There's also the interconnectivity of ensuring through broker relationships that you are doing things the right way, and that is connectivity to accountants and financial planners and also buyer's agents. I want to chat about structure very quickly. Just got a quick break. Stay with us, everyone. Back in a moment.
Are you stressed out not knowing where to find distressed, off-market, high cash flow properties in high-growth areas? What about the best strategy to build a wealth-generating portfolio? Look no further. Dragan Domovsky of Buyers Agency Australia can help. With over 20 years of experience as a property investor, Dragon is a qualified property investment advisor and expert buyer's agent, so he knows how to find the best deals and negotiate for his clients. Right now, he's offering a free 45-minute strategy session to get you started, normally worth $500. Text the code BAA along with your name and email address to 0405 105074. That's 0405 105074. And take advantage of this offer. Take control of your financial future today.
Well, welcome back. Phil Tarrant from the Smart Property Investment Show, chatting with Finny mortgage broker Julie Brennan. Now, Julie, all that time you spent in Bankland doing mortgages before you joined Finny or, operating as a mortgage broker, you must have seen people sort of creating complex structures they may not need, or people who are buying in the wrong entities and buying in the wrong structure. Just how important is structure when it comes to sort of buying real estate and securing finance for mortgages?
Oh, definitely, especially if you're looking at purchasing investment property and then have a plan to purchase 1, 2, or 3. I know particularly the bank that I was working for, and I have seen this with clients that have come to me that have had their loan set up with the bank, they tend to cross-collateralize the security. So just take, mum and dad's house, or take their house that they've got the equity in, and they're buying an investment property, and they would basically do 100% lend against it plus the costs and have them cross-secured. That's great if they only want to purchase one property or they don't have any other immediate plans. But as soon as they want to, say, borrow $50,000 against their house to do a bathroom renovation or go on a holiday, it creates complexities because the two securities are then tied in together. I guess that's the way we structure things a little bit different. Being a mortgage broker is we will always have the securities as independent and just be doing the equity release against, the principal place of residence, leaving all of the other properties standalone, just so it makes things a little bit more streamlined, especially if you are looking to move or you're looking to sell. You don't have all of the properties all unencumbered together, which can create some issues down the track.
Yeah, can do. And you find that happens a lot inside of banks. And the cynic in me says, well, the banks wants to tie up a client so they can't really move on anywhere else. And by cross-collateralizing is one way to do that, because you bundle up all the assets and the mortgages under one sort of individual entity. That said, though, for some people, cross-collateralizing can give them access to finance so they can continue to grow and evolve their portfolio. But it does get messy should you want to start slicing up and selling down some of your assets because they're all encumbered up together. Do you now need to do a lot of unraveling in cross-collateralized properties in your role with Finny Mortgages?
Yeah, I'm seeing quite a few that have come through from that they've had their relationship with the bank. So, and then they're coming through because they might want to be looking at getting into the next property purchase again, and the bank's sort of telling them that they might have hit their limit, and it might be the way that it's structured. So we're looking to, refinance them, have them stand alone where they can, and just have those equity releases there. And also, two different banks have got different lending parameters, I guess, and debt to income ratios. So they may have reached their limit with their particular bank, so they're told that they can't borrow. But then coming to us, we can sort of look at the structure, and we might be able to place their loans with a couple of different lenders to help sort of maximise their borrowing capacity as well.
And it's something to be said about diversifying lenders. When you chat with clients around decoupling cross-collateralized securities on properties, do a lot of them not even know what's happened? That they go, I didn't realise that that's what they did at the bank?
Sometimes we've had, and I know even some of my colleagues as well, when we've gone to look at doing an equity release, they don't even realise that property is linked against another property. I'm finding that clients don't know the structure that their loans have been set up with. They don't even know what property is held against what loan. And so there's not been a lot of obviously clear communication at the time when they're set up with the branch lender or whoever set them up originally. And it has just created issues if we're, looking to take equity out of a property that we think is unencumbered, but then we go and then we find there is a mortgage still on the title, and it can just create some delays and some confusion.
Do you find bank customers might not have the sort of same scope or the same connectivity of other professionals to support them as property investors really tight sort of accounting relationships, for example. And if you're not working with your accountant or you don't have a good property-based accountant, I highly suggest you get one, particularly if you're looking to grow a large portfolio, because unwinding wrong structures can be expensive and it can stifle your investment future. Do you find that bank-based customers might not have the same sophistication of those professional networks as what you find through the broker channel?
I think the way that the bank structure worked when I was there, you had branch lenders, and then above that you had sort of premium bankers or relationship managers that were sort of looking at more high-end clients. So you would think those customers, you would hope that they would have then the support of good accountants and everything. But I think I find a lot of clients that are using brokers, especially for their investments, loans and, their investment portfolio, they are sort of more savvy as well, and they will have those connections with the right accountants, financial planners as well. It'll be like an overall sort of team that they have with them. Whereas I think a lot of people that just want to get into the market and go and see their branch, they just are flying solo.
Yeah, and for first-time buyers, a lot of them, that's where they start. And maybe because mum and dad have banked with a particular bank for many, many years, or they have a Dolomites account, which is the kids' bank account with the Commonwealth Bank. But what they do like is options and choice through the broker channel. Let's dig into that. We'll just go to another break. Stay with us. Back in a moment. Welcome back, Phil Tarrant. Chat with Julie Brandon from Finny Mortgages, finny.com.au. So how long have you been with Finny now, Julie?
Well, I've been with Finny a year and a half.
Okay.
So, but worked with Ever and Beck in a previous life at another brokerage. So it was nice that we all have all reconnected.
Same back together.
It is. The dream team is back together.
So why is it working so well, do you think, at Finny? I've seen the business growing. And I think it's a brilliant business. It's one of the reasons why I invested in it. But why do you think it's working so well?
I think because, obviously Ever and Beck and myself have worked before together, so we know how each other works as well. We've got a range of knowledges over different banks, and we bring to the table different skill sets that we can all learn from. And I think also too, just knowing what worked in our previous brokerage that we were working for, knowing what was working well and what wasn't, we've been really able to model how we want the Finny business to work and to grow, and with our support staff as well, to be effective for us, but also, seamless for our clients as well.
Yeah, and I've worked pretty close with the team to help out on some of my mortgages, and I'm probably not the easiest customer in the world, so these guys have done a pretty reasonable job. But we're chatting about, banks versus broker, and, I don't want to beat up the banks. I think, as I mentioned, the banks very capable outfits in Australia, right? It's how you interface with the banks, which is key, and that's through mortgage broking. Would you rather be a mortgage broker or a branch lender? I think I know the answer. Why is that, do you think?
Because I don't think I'd have a job if I was a branch lender. Just the way that the branches are going, I think that, and that was, to be honest, that was one of the reasons that sort of pushed me to jump the fence, I guess. I could just see that the way that the whole structure of the branch and banking environment was going, and with regards to staffing, and I just thought that there may be not as many opportunities there as there was. So, and there's just, so that was one of the main reasons for me to look into Brokerland, and I haven't looked back. It's been amazing.
Yeah, no, it's you see, you've got a passion for the job, and it comes down to choice, right? Like, how do you work out where to send clients when there is so much choice via the broker channel?
It's really based off our conversations with the customer and working out what their actually needs are, but then being able to place the right loan or the right bank with them, depending on what their needs are, and also what's going to fit them with regards to their income, the bank's policies. I guess that's where you felt a little bit strangled in branch land, because you've only got the one option. So you might not have an option to give that client, so they're going to walk across the road and go to ANZ or Westpac that might be able to help them. Whereas now, with being a broker, that I've got 30 banks on our panel, so I'm going to be able to find a solution for that customer 99.9% of the time that's going to suit their needs, plus it's going to fit with the bank's policy as well.
Well, thanks for your time, Julie. Just really wanted to say good day and get a sense of this sort of pivot that you made from branch lending to mortgage broker lending. And, customers are voting with their feet, but largely because I think the choice and the utility of mortgage broking, but also, to your point, the way in which people are interfacing banks is changing. And maybe that'll be the only channel available at some point in time. Who knows? With the digitalisation of home loans, and also the role that brokers are playing. What do you most like about being a broker? Is it that sort of final question from me?
What do I most like? I like being able to know that I can have the options to give clients to help them with their goals. So, yeah, I like being able to have the options to give clients. Obviously, my knowledge, 15 years in the sort of banking sector, plus another 7 or 8 years in the mortgage broking sector. I would hope to think I've got a bit of a wealth of knowledge to be able to provide some options to clients and some insight. So, and just, helping them achieve their goals, basically, their financial goals.
Yeah, nice one. Well, keep up the good work, Julie. And I know you and your team are always there, ready and available to assist Australians and investors, in particular, but for those with owner-occupied loans via finnymortgages.com.au. What's the best way to connect in with you and your team?
Yeah, so it would be, finnymortgages.com.au.
Nice one. Go and check out finny.com.au. These guys can help you out with some home loans, no doubt. Thanks for tuning in, everyone. We'll continue sort of our discussions around mortgage and mortgage finance. We're now sort of at a point of equilibrium. I think it's, from what I understand, a matter of when rates will come down rather than going up again is what the economists are saying. Whether or not there's still more increases in there, who knows? I'll pick that up in more detailed discussion moving forward. Remember, smartpropertyinvestment.com.au, Smart Property HQ, social media, if that's where you like to find us. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Do you need help planning your next event? With over 15 years of experience, Captivate Events is the expert in event planning. Our dedicated team ensures every detail is meticulously handled. Whether it's a gala dinner, exhibition, conference or study tour, we've got you covered. We'll be there every step of the way, from conceptualisation to flawless execution, to ensure your event is a seamless experience, minimising the time and stress involved in planning. Make your next event one to remember. Visit www.captivateevents.com.au or call 02 88 66 2440 and find out how we can captivate your audience.